Alright, so today I'm going to be talking about how to find your daily bias. Basically, how you know when to buy versus sell. Um, and yeah, this is just something I need to work on finding my daily bias. So I thought I'd just talk out loud to myself and kind of put it in my brain, I guess, if that makes sense. So daily bias is what I would consider in the daily time frames is the 1 day, so right here, the 4 hour, and sometimes the 1 hour. I guess it kind of just depends. But as you can see, so let's go all the way back to a while ago. I'm on the daily right now. We'll just cut to like right here. Alright, so as you can see, on the daily chart, right, you always want to start with the daily because daily holds more, like, it's just more reliable than like the 5 minute or whatever. So as you can see right here on the daily, we're in an uptrend. That's pretty easy to tell. If you can't tell that, then you're dumb, right? Look, you can put on a line chart to help you see it better. It's basically just which way is price moving, and as you can see, up, right? We can go to a different example, like, well, let's see here. Alright, like right here, in this little area right here, which way is price going? Down. So you probably want to be taking shorts going downwards. And then you have this right here, just trending upwards. An upward trend consists of like higher highs and higher lows. Yeah, that's what this is: a higher low, higher high, higher low, higher high, higher low, higher high. You know, just like that. And the only reason your bias would flip is if like a higher low becomes a new lower high. So if price broke below this low, then the trend would switch. So as you can see right here, we're moving up, and I'll just play it. Moving up. Alright, so even just here, when price broke below this, right here, below that recent low. Let me go back. Alright, right here. So now we can just keep going. Boom, price breaks below this low, and now you could be considered you could consider it a downward trending market. And if you keep going, does move down, and then yeah. And then right here, it breaks above this high, the last most recent high. And yeah, now you're looking to take longs. So, yeah, so now you're looking to take longs. So, like, as you can see, if you were to go long, boom, it keeps going. Now you're still looking to take longs. A long means you're buying, right? Versus, let's just keep going. All right, here's a great example. Let me go back. So, we're trending upwards, and this is the most recent low that needs to get broken in order for us to be considered trending downwards, right? So, we play through this. Boom. Right there, we get a break of structure. So now you're thinking, price is probably going to go further down, so now I'm looking to sell, which looks like this, right? You're betting the market's going to go down. So you're like, now I'm looking to sell based off of the daily time frame. But what does the 4 hour show us? This is when other time frames come into play. 4 hour also had a break of structure right here at the most recent 4 hour low. So yeah, both time frames are telling you should be selling. And as you can see, if you did decide to sell, let me just go to the hourly. If you did decide to sell, this is what would happen. Just from basically common sense, figuring out where price wants to go. Let me play this. Boom, price just dumps. Look at that. So that's exactly why you need to have a good daily bias and understand which way the market wants to move throughout the whole day, right? Because if you can understand where the market wants to move for the day, then it's way easier to go on the 5-minute and figure out an entry if you know where price wants to go throughout the day. Another like good little strategy you could use with this is you go to the most recent day's candle. So for example, right here, and you mark that out and you wait, let me go to the 30. You wait the next day for price to come up into here before you sell. Sometimes it doesn't happen, but sometimes it does. Okay, right there. Comes up within the previous day, right here. And then you kind of get a slow, I guess not much happening, but wait, yeah, I guess sometimes that never has a reaction, but that's another good thing is wait for it to come into the previous daily wick before you, and then look for sells. But anyways, just like that, you can pretty much tell which way price wants to go throughout the day. For example, right here on the daily, we still haven't broken above this high right here, which is what you need to happen to be considered bullish. But I'm still bearish right now. So then we go to the 4-hour, and on the 4-hour you can actually see the opposite. The most recent high on the 4-hour right here has been broken, and it's much easier, right? If the daily isn't aligned with the 4-hour, you probably shouldn't be trading, to be honest. But if you are still waiting to trade, it takes a lot more than just figuring out which time frame to use. But based off of this move we have up, you could probably take longs going further. There's also like all these fair value gaps you have to have into play and take into consideration. But you could technically, if the daily looks different than the 4-hour, use the 4-hour because it's the most recent one, and you are trying to trade. Probably soon if you're on the markets. You're probably looking to trade, and so yeah, the 4-hour or the daily. I never really use the hourly for daily bias. I don't even use 4-hourly. That's why I'm making this video, is because I need to start using the 4-hour, just to kind of like help me figure out my daily bias overall. So yeah, that's definitely what I need to do. So now I'm gonna just go over what happened today in the markets, even though I didn't. Tuesday. Wait, what? Alright, yeah, so today, as you can see, let me mark out market open. Can't even see. I don't think that's right. Alright, yeah, right here. So, market opens right here. This is why I didn't trade, is because look at the past. I was only looking at the daily, not the 4-hour. And as you can see, I'm bearish because we're trending down, haven't broken above the most recent daily lower high. But I should be using the 4-hour. As you can see, we're in a strong 4-hour uptrend. So that's why you need to take into consideration both of them and not just one, because looking throughout, if we play what would have happened today, which I didn't trade. Wait. I didn't trade. But because I was bearish, but if you did look at the 4-hour and had a bullish bias, look at that. Right when market opens, this first fair value gap, right here, right when market opens, you could have easily taken longs right off that. This is what I mean why if you can understand where price wants to go for the day, then you're probably chilling for entries and stuff. Yeah, you could have just used that first 5-minute fair value gap right away. Obviously, there's no liquidity sweep, which is what my strategy uses, but and you just let that run out, and you would have hit a trade right there. Boom, take profit, hit. So that's why you need to have a good daily bias, and you need to take into account daily, 4-hour, maybe even hourly if you feel like that's what you need to do. Yeah, and I need to work on that. I've only been using the daily, so yeah, but the 4-hour is definitely something I need to take into consideration, and I'll definitely be using that tomorrow. I didn't trade today because on Wednesday. Today's Wednesday, which is, what is it? That doesn't even help. Wednesday, it's not much news. All yellow folder, which is the same as yesterday and on Monday. And when there's not a lot of news, the markets don't really move, and it's kind of crappy. Tomorrow's looking pretty good. We've got a red folder at 8:30 before market opens, so hopefully the market's actually moving tomorrow. And as of right now, let me move this right here. As of right now, just look. If I were to just look at the 4-hour right now, I will be bullish going into tomorrow. It depends on what happens overnight. If this 4-hour fair value gap gets respected or disrespected. If it gets disrespected, I'm bullish. Daily, we're in a daily fair value gap. If it gets respected, then disrespected, I'm also bullish. So yeah, I guess we just have to wait for price to kind of map out throughout the night and go from there. So that's basically it.